Trends. The market will have momentum in one direction, and this is called a trend. We can have an uptrend or a downtrend. The market has a tendency to travel in one direction for a length of time. These longer-term moves are called trends. There's a saying in Forex circles, the trend is your friend, and then there is some truth to this. A trend can go on for a lot longer than traders think it should, so trading in the direction of the trend becomes a safer bet than trading against the trend. If the market is climbing, taking a buy trade has a higher probability of succeeding than taking sell trades in the opposite direction of the trend. The definition of a trend, the uptrend, is defined as a series of consecutive higher highs and higher lows. The downtrend is a series of consecutive lower highs and lower lows. We take a look at the image to the left, we can see the blue uptrend. Each high that is being made is higher than the previous high. Each low that is being made is higher than the previous low. Consecutive higher highs and higher lows. The red arrow is a downtrend. This is the exact opposite. We see a series of consecutive lower highs. So each high being made is lower than the previous high, and a series of consecutive lower lows. So each low that's being made is able to get lower than the previous low. A trend is relative to the time frame chart that you're looking at. For example, if you're looking at the daily charts, a trend could last for months, while on a 1-minute chart, a trend can last for 2 hours. While a trend moves in one general direction, up or down, it will move in a zigzag pattern. A trend is never formed in a nice, smooth motion. It sputters and pauses and retraces and pulls back and consolidates and hums and haws. Generally speaking, it's not nice and clean. The image that you see on the left is an image of a 4-hour time frame. The market bottoms out and then rallies for 72 candles before it finds a solid ceiling. You can clearly see in the chart that the price is making higher highs as the market climbs. Each high is consecutively higher than the previous high. And from the bottom side, you can see the chart is making a series of higher lows. Each new zag down is higher than the one it made previously. Trends are broken down into long-term, medium-term, and short-term trends, and these are based on the highest time frame that you're looking at. For example, if you're looking at only the 1-hour charts, you would have the main trend or long-term trend present in front of you. Inside that main trend, you will find a secondary trend or a medium-term trend in the opposite direction. It will be a pullback within the main trend. Now, inside that medium-term trend, you will have a tertiary trend or a short-term trends that will go with the main trend. This is the 1-hour time frame, and we can see the price rises from the lower left to the upper right. Now, this is the long-term trend, and in this case, it's up. Now, this is the same time frame, and we see a medium-term trend forming in the middle of the long-term trend. The medium-term trend will be in the opposite direction of the long-term trend. The long-term trend in this example is up. The medium-term trend will be down. And finally, the short-term trend. This is a mini correction in the medium-term trend, and this is in the same direction as the long-term trend. The main trend is the trend direction that carries the most weight. When we're looking at several time frames, the highest time frame will show you the predominant trend direction. If you want to trade the 15-minute time frame, it's always a good idea to see what that longer-term time frame is doing. A setup for a short trade may not turn out too well if the next higher time frame is moving in the opposite direction.